Well, hello and welcome to Indian Open right here on BloombergQuint Live. I'm Neeraj Shah. Devina should be joining us any moment. And it's an interesting morning of trade simply because the world markets aren't all that positive. So we had the US markets crack in trade yesterday, 2 days on a trot, even though the futures are marginally in the green. But we know yesterday's experience shows us that futures don't necessarily mean too much. So because futures were in the green yesterday, but we corrected. So the US markets have corrected. Asia's not in a spot of bother, but certainly in the red. SGX Nifty, neither here nor their kind. So not a great sign for the bulls, but a number of events lined up. One and things to monitor today. Crude, the price fall that we've seen. Reliance Industries because of the Facebook deal, and we'll talk about that, as well as ACC because of the numbers. So two or three important things to monitor on open today. So do watch out for all of these things in trade. Keep in mind that FIs continue to sell. We've had a large sell number in trade yesterday as well. In the last 4 days, FIs have sold about 6,500 crores from the Indian markets in 4 days alone. So that's not probably a good sign. The trend is lower. Let's see if there is some things that arrest this. Now, the big newsmaker of the day has to be Reliance. We cannot start the show with that. And Samit Sarkar joins in to put this deal into perspective. Samit, tell us what this deal entails and give us some numbers. I mean, what does this value Geo per share? Is this higher or lower compared to expectations that brokerages have had? How does it all stack up?
So Facebook will be investing close to 5.7 billion US dollars or 43,600 crore rupees in Reliance Industries wholly owned subsidiary, that is Geo Platforms Limited. Now Facebook will get nearly 10% stake for its investment in this unit, making it the largest minority shareholder. Now this investment values this unit, that the Geo Platform unit of Reliance Industries, at close to 4.6 lakh crore rupees. But this is pretty much in line with what the analyst and the company was valuing this unit of Reliance Industries. So last year in an analyst meet, Reliance Industries had stated that it has received interest from strategic partners and financial investors and sees an enterprise value for the platform entity, that is Geo Platform Limited, at around 60 to 70 billion US dollars, which is nearly 1.72 times the invested capital of Reliance Industries. So the valuations for which that Reliance Industries has got for this unit, that is Geo Platform, is pretty much in line with what the analyst and the company was estimating it to be. Inducting this new investor is also in line with company's earlier stated strategy of getting new investors in the telecom unit. Now, earlier, along with all these announcements, earlier Reliance Industries had also announced the plans to restructure its telecom and digital business. Now, this is important to understand what this entity that Geo Platform owns currently in its kitty. Now, Geo Platform owns the mobile telecom business, the broadband business, and its investment in digital businesses, which includes various platform apps, artificial intelligence apps, cloud initiatives that the company has done so far in the past. Now, the entity will largely be a debt-free entity, as the entire debt of this company, that is Geo Platform, will be transferred to the parent entity, that is Reliance Industries. Thus, this fresh fund infusion of Facebook is unlikely to lead to any debt reduction for the company as a whole. However, it could support the future investments of the telecom business and the digital business of Reliance Industries. Now, the restructuring was aimed at doing two things. Firstly, housing the digital assets within a debt-free entity and making the new entity comparable with global platforms such as Alphabet, Tencent, Alibaba, etc., that are largely debt-free and have created such a large digital ecosystem. So this is the reason why this entity was formed, and now they have got in a new investor in this company. But that is largely to this investment by Facebook in Reliance Industries will not lead to any debt reduction for the company. Currently, of the all businesses and investments held by this unit, there is Geo Platform. The telecom unit is the most valued, because this is indirectly Facebook entering the telecom sector of India via Reliance Jio and this investment in Geo Platforms.
Samit, okay. So Samit, good clarification there. Just one question follow-up before we get to Abhimanyu Sofat. And that is when we look at these numbers, Samit, 43,574 odd for that 10% stake would value Geo at what? 675 or 685 rupees per share? Isn't that higher than what the brokerages were penciling in?
No, it is actually not higher. Analysts were pretty much expecting the valuation of a Geo Platform unit to be close to 60 to 70 billion US dollars. So it is pretty much in line with what they were expecting.
Okay. Okay, so Amit, thanks so much for putting that into perspective. So money coming in to geo platforms will not be used to reduce debt for Reliance Industries. That's the big thing that you got to keep in mind as well. Abhimanyu Sofat is with us. Abhimanyu, good morning. Thank you so much for taking the time out. How have you guys thought about this deal in the morning call today? What would you tell your large clients, your large institutional clients to do when it comes to Reliance Industries post this?
So, good morning. So, I think so in terms of the overall valuation perspective, earlier we stayed around 2 months back, we were valuing the company close to around $75 billion in terms of enterprise value, and which we had recently cut it to around $67 billion valuation. So, this number is very close to our number, slightly less than $66 billion valuation in terms of enterprise value. In terms of price to book, it is somewhere close to slightly close to somewhere close to 2 times price to book. So I think so from a valuation perspective, this seems to be quite a fair deal overall. We had also seen recently that the debt of the company was getting transferred as an equity investment from Reliance. Clearly, the challenges that one was looking at is that there could be a possibility of revenue market share decline for Geo, which we were expecting to be around 45% to around 44% because of lower amount of money being available from the core business of Reliance to invest in Geo. So this actually removes that particular overhang for the company. So going forward in terms of subscriber additions, we clearly see Geo with this amount of money coming in to really benefit relative to other players, since they have a significant amount of, cash per se. So from that perspective, I think so this is quite a positive move from the company, considering that Reliance will continue to face now a lot of challenges on the core business because of the lower crude price, which we all witnessing over last couple of days, actually.
Abhimanyu, how does this deal augur for the remaining telecom companies? I mean, one that there's a platform, but a telecom related platform which has got such a marquee investor, is that a positive? Or is it that Reliance gets some money and therefore it should be negative for the other telcos? How do you read into this?
So I would say, in a way, it is, in terms of market share gains perspective, I think so it will be a positive for Reliance Jio and not for the industry. So it's kind of a negative for the other players that, Jio can become more aggressive in terms of getting clients in this particular juncture when there is a lot of challenges in terms of, cash flow with the AGR case happening. And we all know about those challenges with especially in case of Vodafone, though we know that in case of Bharti, they have already done a decent amount of raise over last couple of, quarters. So they are still in a better position. I would say it is more of a positive for the company Reliance, considering that the core business is going through a lot of challenges, rather than saying that it's a very big positive for the industry, because the business model of Jio and the other players are very different. It's not only about normal, ARPU. They have a lot of other digital assets where they have invested a lot of money through these companies. So I would take it as something which is clearly positive for Reliance, rather than something which should be taken a positive for the entire industry per se.
Okay, so that's the key when it comes to Reliance, and positive for Reliance, Abhimanyu believes, not necessarily so for some of the others. A lot of people have tried to extrapolate that if there is a deal that happens in one company, the other companies get benchmarked accordingly. It may not necessarily be the case this time around, so do watch out. The other big talking point, Abhimanyu, the last 2 days has been crude, naturally so. Since we're talking about Reliance, I just want to shift focus on the other upstream names as well, or maybe the downstream names. How do you view this decimation in crude prices? I mean, we may see a bit of a bounce back. I'm not saying prices will stay here, but the new normal being lower, what does it do to upstreams like ONGC or to downstreams like the oil marketing companies?
So, just imagine with this kind of volatility that we are witnessing, what happens in terms of inventory valuation. So I think so now what kind of numbers any company will post from the sectors, until unless we see some kind of stability. I don't think so. Analysts are going to probably be able to give a proper estimate for those numbers. To be very honest, at least for these 2 quarters, which is March quarter and for June. Having said that, I think so. If you look at the overall sector, then clearly, ONGC is a release from our side, and we believe that it's better to be in the city gas distribution companies. Those are likely to do decent. One can look clearly at Gujarat Gas, within this particular quarter. We are expecting at least doubling of profit for this particular quarter for the company. So our view is that if one has to be in the oil and gas sector, since most of the bigger PSUs are leveraged to commodity prices and currency, I think so it makes sense to be just in the city gas distribution company and maybe not look at even the refining company, though they are still attractively valued. And we always, have the divestment of BPCL also, which at some point of time will happen. But the volatility that we are seeing in the international market clearly suggests to us that, it seems that city gas distribution company, whether we are seeing NGL, where expansion is going to be there in terms of margins as well as lower tax rate, or you see some improvement happening in case of IGL as well because of expansion. So I think so those will be the companies that we should be looking at in addition to Gujarat Gas, where because of higher Modi sales, one could see an expansion of margins.
Okay, well, that's a review on the upstream names as well, and I'm told Devina is with us now. Devina, good morning. We discussed the big deal of the day, that is Reliance Industries and the Facebook deal, and that clearly seems to be the talking point. But there's just so much more to the markets today.
I mean, it values Geo at about 65. The enterprise value of $65 billion, similar to the range the management earlier alluded to, but definitely almost 2 times the overall investment that was made in the company to begin with. But the other one also being ACC, that's going to remain in focus. The reported results in Q1 calendar year 20 results that came out yesterday, volumes took a dip. That was expected. So 12% decline, year-on-year decline in volumes due to the lockdown. And obviously keeping in mind that, you have a monsoon, good probability of a good normal monsoon growth in rural economy, maybe revival can happen. But then again, you face once the monsoon set in, that's again a period of lull. Abhimanyu, a quick word on ACC numbers and what did you make out of it?
So, we believe that, in case of ACC and most of the other cement players, going forward, it's going to remain quite challenging in terms of, growth. I clearly feel that, CapEx will not happen at all going forward. And with the kind of challenges we are seeing in the real estate industry, the demand of cement is likely to come down drastically going forward. When people don't have money, they'll probably look at consumption rather than investing in a house. Or, even on the commercial real estate side, one could clearly, because of this work from home and, other factors. And also we are seeing that the banks don't right now are comfortable giving money to, builders, and, the entire ecosystem seems to be collapsing, to be very honest with you. So from that perspective, I would right now not recommend investors, despite these prices, to get into the sector, and would be a clear avoid from our side.
Avoid this particular space is the opinion coming in from Abhimanyu so far. Let's bring in Nikki. She's joining in right now with a quick update on some stocks and news. Nikki, good morning.
Morning, Devina. I'm going to start off with ACC. In fact, the kind of operational show that the company has delivered, and it's quite commendable number that the company has thrown up. If you look at the top line growth, it's a down 10.6% downtick there. Net profitability too has taken a hit by as much as 5.5%. But then the real number lies where the operational performance is. It's up by as much as 10.3%. And the number that they've delivered is around 586 crore, which is higher than what the street was estimating. The number was worked out around 530 odd crore. Clearly, the company has surpassed the operational performance and the expectations on those lines. The margins have been at 16.7%. as compared to 13.5%. As you just mentioned, the volumes have taken a hit on account of the COVID-related slowdown, which has come in the month of March. But then clearly it's the variable as well as the fixed costs, which have been way below what the expectation was, and because of which we're seeing this splendid performance right now. And also talking about cement pack as a whole, you've seen Shree Cement talking about it and saying that they expect normalcy to resume going back only in the month of June altogether. We're also looking at Den Networks, where the numbers are fairly decent, I'd say. Revenue up by 20%, EBITDA performance up. The EBITDA number is up by as much as 73%. Margins are at 20% as compared to 13%. The company has delivered a net profit of 25 crore as compared to a loss. Do bear in mind the fact that there was also an exceptional loss in the corresponding quarter on account of which the numbers might look a tad more prettier than what they've actually delivered. But overall operational performance too has been good for this counter. We're staring at relatively weak numbers coming in from Tejas Network, where the revenue is down by 80%. The net losses have only widened, and the company has reported an EBITDA loss of 118 crore as compared to a gain of 52 crore in the corresponding quarter. You have the weak revenue, essentially, which is weighed down on the operational performance of the company, and the challenges and the inability to ship confirmed customers' orders have essentially weighed on this counter. We're also looking at JTPL Hathway, where revenue is up by 2 times, EBITDA is up by 47%, and the net loss has narrowed down for this company, so fairly decent show there. HDFC, which has reduced the retail prime lending rate of the housing loan by just 15%. And also last in the list, we're looking at Federal Bank, where there is a March quarterly update. CASA is up by 2%, and the total deposits for these banks have grown up by as much as 5% on sequential basis.
All right, Nikki, thanks so much for that. Well, those are some stocks that you got to keep in mind. And now let's get in our derivative and technical experts on board to talk about trade today. Chandan Tapuria, to talk about the derivative side. Chandan, good morning. Thanks for joining in. How are you approaching trade today?
Yeah, very good morning. We have seen some selling pressure on the market in last trading session as it opened down by 250 points and then remained consolidative. Recently, the market made high near to 9400 zone, and that is a 38.2% retracement of the entire down leg. This market made the high of 12,430 and the recent low of 7511. So it respected to its key 38.2% retracement. So it seems that some kind of immediate bounce is getting a pause and market may consolidate for the next leg of rally. So it seems that the supports are being placed at 8800 zone in the market. So because of the support at 8800, it may remain consolidative. But it seems, but at the same time, the resistance are being placed at 9400 zone. So as of now, the approach is just go to be consolidative move. Upside is likely to be kept as well. So use the decline towards 8800 zone to reset the position for an up move towards 9100 kind of level. Similarly, the Bank Nifty also taken hurdle at 21,100 zone. So immediate support for the Bank Nifty could be at 18,500. And if it corrects by further 200, 300 points, then one can look at the support of 18,500 to again witness the bounce of 500, 600 points going forwards.
All right, Chandan, that's a quick call coming in on the indices. Individual stocks, though, Chandan, what would you trade in today?
Yeah, looking at the market setup, we are balancing the trading setup in such kind of market where we have positive on most of the pharma and couple of FMCG counter, while negative on most of the metal, private bank and NBFC stocks. So by looking at the theme, recommending to go long on DB slab, this stock has been making higher top side bottom formation. The setup is quite positive. We have seen built up of long positions, and most of the pharma companies have done well, including Oro Pharma, Dr. Reddy, Lupin. So here recommending to buy on DB slab with a stop loss of 23.20 and expecting it to move towards 25.50 kind of level. Second trade, that is sell on Tata Steel. This stock has negated its formation of higher highs, higher lows, and it seems that recent bounce is taking a pause and stock may again correct to lower level. We have seen built up of short position. The stock has seen the build up of call writing on the higher strike. So recommending to sell on Tata Steel with a stop loss of 272 and the stock can slip to us 250 kind of levels.
Okay. Those are some stock ideas coming in. Keep an eye out on them. I want to specifically talk about the likes of an ICICI Bank and the kind of battering that it has been seeing because of that one account, the Singapore oil company, Henleong Corp, and the exposure that it has there, which will have financial implications. But Abhimanyu, what are you making out of investing in some of the, I wouldn't say a number one private sector bank, but maybe likes of Axis Bank, ICICI Bank, which also have come down to fair value.
Yes. So see, the point is that, we have to look at which are the banks which are more sustainable, more resilient in terms of, there being issues with regard to, potential credit cost, with regard to, challenges in terms of reduction in funding. So a lot of those kind of things we need to look at in terms to assess that which are the better banks that one needs to look at. From that perspective, one clearly feels that, it is better for us to look at two banks, which is HDFC and Kotak Bank, because they are the most heavily capitalized banks and they don't need enough money in terms of solvency. In case of Axis Bank, ICICI Bank, though they are very well capitalized, in case the probable reason, if we see that, their gross NPA ratios increase by more than 10%, in that scenario only they need to raise capital. So looking at that scenario, in the current challenging time where we expect overall market to correct, I think it would make sense to be in the HDFC and Kotak Bank. Once we have stabilization, then obviously, Axis and ICICI can be looked at in terms of investment. We also have to worry about the risk that we have clearly seen in case of ICICI with yesterday, the issue with regard to the company which was into trading into oil and gas sector. So our view is clearly that, focus on high quality names which have more ability to, withstand challenges. That would be our point. So the first two would be an HDFC and Kotak Bank. Number three would be ICICI and then Axis Bank.
Though I wonder if the near term we might actually have some bit of selling pressure on these names. Gaurav Bissar Johnson. Gaurav, yesterday the bank, good morning, of course, thanks for joining in. Yesterday the bank Nifty was the key culprit. Do you reckon there could be continued pressure on the bank Nifty today?
Good morning. If you see the overall picture, then yes, there's a chance that we may see. It has not been the case of just one day where we've seen Bank Nifty not performing. Even when Nifty is pushing higher, it cannot jump to its full potential because Bank Nifty has not been performing. So it's not only about Bank Nifty falling more. It is also about Bank Nifty not moving in same tandem as what Nifty is doing. So yes, there's a possibility of that. The supports are coming at lower, 18,500, 18,600 is support level. So I would be a little critical on that. That does not mean one goes out and sell at every level, but yes, there's some pressure that can be seen in Bank Nifty, and there has to be some very good confirmation for the up move. Till that does not happen, I think it's going to be the more volatile one and the more weaker one.
Okay. What about specific stocks?
The first one would be on TVS Motor, where we have seen some buying interest emerging in the last couple of days. 300 put option is funded figure charts on multiple box sizes, where we have seen breakout happening. It can head towards the level of 325, stop loss of 301. And Bajaj Finance, where we have seen high levels around 2,300 around those levels. There's some amount of unwinding. The fresh shorts that are still getting built. Higher strength of seeing call writing happening. It's trading near the support area. On simple price action, it's forming a descending triangle pattern where we can see a breakdown. If it trades below levels of 2,100, one can keep a stop loss of 2140, play for targets of 2,000.
Okay, some of these stocks do keep them in mind. What's happening in the telecom space? And Abhimanyu, I want to talk to you about that. As leaving this particular deal aside for Jio, just the fact that how the business matrix right now, whether or not, be it with regards to the ETC charges, be it with regards to the increased consumption of data, or anything else within this space, do you feel that Bharti Airtel stands to gain substantially and therefore could be a stock to be looked at from an investment standpoint?
So absolutely, I think the telecom is one space where the light at the end of the tunnel looks brighter relative to other sectors. What we have seen is that because of COVID, they could be slightly dip in terms of, slowdown in terms of net subscriber addition, pace of upgrade from 2G to 4G. We also are looking at, a deferment in terms of tariff hikes because of regulator getting involved. So those are some of the things. For that reason, we have cut our estimates for Bharti and Jio for this particular for FY21, our EBITDA by around 10% from our previous estimates, and for Vodafone by around 7%. We believe that, going forward, these companies should do exceedingly well, considering, how the entire work from home culture is happening and the entire changes that we are seeing. In terms of data consumption, for example, in case of Jio, this particular quarter, we are clearly seeing QOQ increase of close to 5.5%, and in terms of GB of traffic consumption for Jio. So I would say that for most of the players, we do expect a very strong momentum in terms of numbers and improvement in margins going forward. A bit that the top line growth may not be that high. Having said that, at least till FY23, there's still a potential for the industry to at least grow by 20%. So from that perspective, it looks a very decent sector to be there. And Bharti Airtel, being one of the leading companies, should clearly be a winner considering that they have raised capital over last few quarters.
Okay, Bharti Airtel, they're back to those almost back to those pre-COVID levels. They're at $500, 2% higher for Bharti Airtel, and what a roller coaster ride for the telecom industry as a whole. With those penalties being levied, and the whole prospect of how they're going to start their debt reduction plan, how are they going to create a war chest to make sure that they can bid for 5G. Now 5G obviously gets pushed back a bit, but really a roller coaster ride. And then coming back from the ashes for Bharti Airtel of sorts, 500 on the stock. A quick technical check though. If you could give us one on Reliance and one on Bharti, Gaurav Vista.
If you look at Reliance, there's a small hurdle at levels of 1250, 1255, where it almost closed yesterday. Once it trades above this level, the next set of targets would be around 1200 to 1300. We have seen some OI concentration 1300. So it might try to panic those people who have been short in 1300 call option. That is what I expect today in Reliance Industries. For Bharti, I don't think there's too much of trade right now. You're talking about the investment perspective as well. See, if you look at the daily charts for trading per se, then we have a hurdle at levels of 510, 520, and we have seen that between 520, 530, there have been a couple of reversals. Now, looking at the bigger picture, if you look at the monthly charts as well, there is a strong hurdle on levels of 525, 530. It does not give a monthly close above that, and we see a reversal sort of happening. There has been 4 instances. So it's been trading the channel of last 13, 14 years. So on that perspective, I would say till the time we don't see Bharti trading comfortably above 535, 540 for a couple of weeks, I would not be too gung-ho about the name. Even for trading perspective, if it trades above levels of 520, interesting. Till the time that does not happen, I will be a little bit cautious.
Okay. Well, watch out for these names as well. Just one quick follow-up, Chandan Tapari. I don't know if you spoke about ACC already, but the last few days it's gone up quite a bit. Yesterday saw a bit of shorts ahead of the numbers. May start off marginally higher today. Do you reckon it could see some short covering? I mean, what is your analysis suggesting?
See, in fact, SEC recovered well in last couple of trading sessions, but exactly on last trading session or 2 days back, it has taken hurdle at 50-day exponential moving average. It had open interest by 3 to 4%. So it corrected from higher levels. Some weakness could be seen, but I think support could be again placed at 1100. So if it corrects towards 1100, I think one can utilize the decline to again play for upside move towards 1200 to 12.
Chandan, let me interrupt. Chandan, it may just start off. Okay, I think we've lost Chandan as well. But the point is, ACC might just start off a bit higher, and that's my question. Therefore, would it see some bit of covering, because yesterday it was under a bit of pressure, 2 or 3% lower ahead of the numbers. Can we see that bit of short covering in for ACC? That's the key question. But Devina, interesting. Reliance, ACC, crude, a lot of things in the mix.
Yeah, a lot of things, and you watch out for the rupee as well. We're just around hovering closer to 77 now. Yesterday is close to 76.83. So, that's a crucial variable to keep an eye out on. A record low for the currency. Starting off first, obviously, ISGX Nifty is flat, marginal negative bias, but that may not play up on the index as much. So let's see what Reliance Industries does for the index this morning. Yesterday itself, it was amongst the top 3 gainers in terms of point contributions that came in. That helped uplift, and you saw that big move coming in towards the dying moments of trade in the last half an hour of trade actually for Reliance. Pre-open on your screens, we are marginally positive right now on the index, but somewhere around 9,000, sub 9,000 actually. Sensex is at 31,091. Coming to individual stock price performances with what crude oil has been doing, Brent crude at sub 20 at $18.5 per barrel. Upstream companies definitely going to take a big knock, and ONGC is already reflecting that. 10% lower for ONGC at open. Adani Ports is down 6.5%. Icici Bank's down 5%. Power Grid, JSW Steel, Nestle, Bajaj Finance after that big 9% sell-off is down 2.5% yet again. Hero MotoCorp, M&M, JSW Steel, ICICI Bank, ITC are all looking weak. You have some gains and big 10% of Reliance Industries. And that's going to be a sharp move. And Reliance Industries also gradually making its way and taking its chart forward. 1361, Grasim is up 2%. Bharti Airtel is up 1.7%. Sun Pharma, Z, Infratel, SBI are the only few stocks that are trading in the green right now. A few stocks unchanged, but nothing too major in terms of the pricing activity as of now. Currency, not yet got the opening tick, but Neeraj, Reliance is definitely the one to watch.
Reliance and Devina, I think some of the other Reliance Group companies, the Network 18 group of stocks, have also seen a bit of a movement, I think, in the pre-open session. So do watch out for Television 18, do watch out for Network 18. Those could be interesting stocks to monitor. Do watch out for Oil India as well. That stock likely to start off lower if the pre-open rates are to be believed. So that's something that you also have to monitor, down about 10% as of now. But those pre-open rates could be earlier. Hathway Cable, also remember, a Reliance Group company up about 20%. All of these are flash rates, could change. Last but not the least, just want to mark what ACC is up to. Looks like starting off well. Let's see if it maintains this 3% kind of a gain number. This associate cement company. So ACC, let's wait and watch what happens. Bharti Airtel, by the way, is starting off well, as Devina said as well. What's not doing well, and we spoke about the upstream companies, the other is the globally exposed commodities and how weak they have been the last couple of days, and can they sink further? Abhimanyu, is there for example, a company like Vedanta, it's got cane and therefore issues galore. If you had it in your portfolio because you bought it at lower levels thinking that you will ride the up move a month and a half back, if you have these stocks in your portfolio, would you get out of them?
So absolutely, I think so. Right now the way the commodity cycle is moving, it is very difficult to understand where we are. These times when you have, even we understand it is more related to ability of storage of people in US. But still, these kind of prices that we are talking about and the kind of slowdown in terms of how prolonged this lockdown is going to be, from that perspective, I think so it doesn't make sense to bottom fish in the commodities right now. Let's wait for some more positive news on the vaccine side, and if that happens, clearly, it would make sense to buy commodities at 30% higher price than this particular current price, and then, you can probably make 2x money at that particular point of time. I think so that would be a more sound strategy for people to look at, because if you have a current environment the way we have right now, I think so the global trade per se will continue to remain quite timid for a decent amount of time going forward.
All right, Reliance Industries still after 5 minutes of pre-open is up 10%. So you could expect this move at the open as well, and maybe could get a little amplified too on the upside. Just before we go in and hear what Mukesh Ambani said on this, I just want to pick Chandan Taparia's view on Reliance at 1360. If it opens, will you buy it?
See, open at much higher, then it would be tough, but comparatively Reliance has positive setup. Technically, it has given a breakout from a small pole and flag pattern on the lower time frame. I know last trading session stock recovered well from the lower levels with open interest addition of 6-7%. Put writing is clearly visible at 1200 strike. So the momentum can be seen at 1400 kind of level. But if it opens much higher, then I think wait for a decline. If stock provides the opportunity near to 1280 to 1300, then definitely one can buy with a stop loss of 1240 for an upside move towards 1400 kind of levels.
All right, let's listen into the chairman, Mukesh Ambani. He shared a message on Facebook, Reliance Jio platform, on the Reliance Jio platform deal, and listen in as to how he plans to use Facebook and WhatsApp platforms to aid JioMart.
In the very near future, JioMart, Jio's digital new commerce platform, and WhatsApp will empower nearly 3 crore small Indian Kirana shops to digitally transact with every customer in their neighborhood. This means all of you can order and get faster delivery of day-to-day items from nearby local shops. At the same time, small Kiranas can grow their businesses and create new employment opportunities using digital technologies. And in the days to come, this winning recipe will be extended to serve other key stakeholders of Indian society, our Kisans, our small and medium enterprises, our students and teachers, our healthcare providers, and above all, our women and youth who form the foundation of a new India.
All right, definitely going big, and scaling the data business, and also, getting into, the consumer space. And I think that was something that everybody spoke about since a while, of Reliance's intention to make sure that they're this big behemoth in the Indian consumption space, and carries forward that Indian consumption story as well. So linking the two is a pretty good move, I would say. And the stock, like we pointed out, 10%, it's now actually come off. So it's about 6.6% now towards the end of pre-open. I think Gaurav Bisa is back with us. Gaurav, just, comment on some moves that we've seen on a few other names. Within the last few days, we actually saw an L&T doing well. They have managed to get orders in the month of April to the tune of almost 28,000 crores. So on the fundamental side, there is some support backing in. Technically, though, Gaurav Bisa, what levels would you watch out for L&T? I think we've lost Gaurav Bisa again. Chandan, you want to take that? Levels for L&T?
I think I can talk, but I'm not sure whether my network is okay or not. If you look at the L&T, the stock has seen strong recovery in last 3-4 trading session. Earlier, this stock was not doing well, but the way it has recovered well from the lower levels with some short covering, it indicates that some sort of price movement could be seen in this counter. So stock which closed near to 873 has potential to move towards 925 kind of level with the support at 850 levels.
Okay. By the way, some of the NBFCs continue to grind lower. As I see the end of the pre-open session, Bajaj Finance is down about 1.5%, yes, but Piramal is down about a couple of percentage points as well. So a clutch of these NBFCs continue to grind lower. Abhimanyu Sofat was earlier talking about the banks. What about some of these troubled NBFCs, Abhimanyu? Again, stocks that have corrected quite a bit already, if you still had them in your portfolio, Piramal, for example, would you get out of it?
So, see, the point is that very honestly, most of the authorities, whether you talk about the RBI and the government, they have not helped NBFCs much. The latest TLTRO which has been issued also, I think it clearly, it is something which is an optional for the banks to provide money to these NBFCs sector. So for that reason, I see that unless we are going to see a drastic support from the government, it will be very hard for NBFC sector to do well. Yeah, most of the customers in the who NBFCs have lent money are saying that, there's a moratorium which is there for a 3-month period and we will not make any payment. We are seeing cases of, checks being bounced. However, at the same time, what we are seeing is that the banks still the NBFCs owe money to the bank, and as said, there is no clear directive from the RBI that you are not, it's fine if you don't repay the bank during this time of lockdown. So from that perspective, I think so there will be a lot of challenges going forward. In case of Piramal, since they have a very large exposure to the real estate sector, considering what has happened now, we clearly see a significant dip in terms of real estate prices going forward. And for that reason, I think so it's clearly a time to, sell these stocks even at these valuations, because, one should wait for the right time. With regard to Bajaj Finance as well, the more the lockdown prolongs, the difficult it will be for people to, repay and buy products using credit facilities from Bajaj Finance. So right now, it's not a right time to as such average.
Viewers, it's 9:10, and I think Abhimanyu's point should be well taken and well observed. I think it's a lot of wisdom in that answer for NBFCs at large, and even for a name like Bajaj Finance. But let's wait and watch. For now, since 5 minutes left for the markets to kickstart trade, let's tell you all that you need to know to stay ahead in trade today. First up, Facebook will buy 9.9% stake in Reliance Jio's platforms for 43,574 crores. This is the biggest FDI investment coming into India in the technology space.
Cement major ACC's profits declined 5.5% to 320 crores, and revenue declined 10% and came in at 3,500 crores. But both were higher than consensus.
Mixed earnings from the cable sector, weak quarter for Tejas Networks, but a steady one for a company in the database space, which is GTPL Hathway and Den Networks.
Vodafone Idea has paid about 1,367 crores to the government towards license fees, spectrum usage charges for January to March quarter, reports ETI.
HDFC has reduced its retail prime lending rate on housing loans by 15 basis points.
Nestle India says all its manufacturing locations have received permission to operate and are now operating at scaled down levels. Most of the distribution centers and suppliers are also operational, but with low volumes. And in fact, I want to pick up on that point, not for Nestle, but take the drift towards the other consumer discretionary space, which is autos. And Abhimanyu, we've spoken to Mr. Sunil Kant Munjal, we've spoken to Mr. R.C. Bhargav. Most of the auto majors have taken a call not to start production till the lockdown gets lifted. And it's an issue of getting your production-related supplies, your raw materials, rather than labor and starting production. It's also the cost-to-income ratio that one needs to observe now, because there's going to be a demand lag for some time as discretionary spending starts to peter off in these problems. Do you feel then that auto, as an investment thesis, can take a bit of a backseat in the portfolio rather than going out and buying stocks, even though they've come off significantly? Abhimanyu, that was for you. Okay, I think we've lost Abhimanyu's line there. But yeah, if you were to go by what Mr. Munjal said, yesterday in his conversation with us, he did point towards the fact that affordability in the Indian within the Indian consumers is definitely a key variable to watch. And coming out of these troubled times, whatever money you have, it's first going to be allocated to the more necessary spends, the essentials that one's going to spend on, rather than spending on, an item like a high-ticket item like a car or even a motorbike for that matter. Abhimanyu, if you can hear me, I wanted your view on the auto space.
I think so. Clearly, in case of Tata Motors and Ashok Leyland, they are likely to slip into losses at this particular point. One must keep in mind that, there's an impact of BS6 transmission on margins for most of the companies. And there's also an impact on overseas business, which is typically a low margin business, which will especially impact, Tata Motors. And in fact, if you talk about the ancillary sector, then Motherson, Apollo, as well as Bharat Forge, all those are also going to get negatively impacted. So it would make sense to look at, companies which have relatively lesser stressed balance sheets, which are likely to have significant amount of cash flow improvement going forward. From that perspective, I think so two-wheelers is something which would do better relative to four-wheelers as a segment. We also see a shift happening.
Abhimanyu, sorry, but Abhimanyu, I'll have to come in because the markets are just about getting ready to start trading. I'll just ask you about your other part of the answer immediately post-market open. But here's how the markets are starting off this Wednesday morning. The pre-open rate suggested about a 0.7% uptick, and I think we started about 0.5% higher. So Reliance 0.5% for the, in fact, now slipping very, very quickly. So 8991, very, very flat for the Nifty despite the Reliance Industries move because the banks are correcting. Let's talk about the gainers first. Reliance, Bharti Airtel, Bharti Infratel. Those three make up the list amongst the top gainers. But look at the losers, oil and banks. So ONGC down 5.5. IndianOpen Bank down 3.5. Bajaj Finance is very close to the 2000 mark. Keep that at the back of your mind. Vedanta is down about 2.5 too. ICICI Bank, HDFC are amongst the other names that have corrected. And Axis Bank is down about 1.5% too. But I think commodities and financials, as I said, take center stage. JSW Steel too is looking very, very wobbly. And the markets have now slipped into the red. This is despite Reliance Industries deal. So net, if you take a deal quotient out, the markets, the Nifty 50 would be down at least 0.5%, if not more. So it's not a very good start. Let's see if it actually succumbs to some more selling pressure from here, or does it breathe better? Devina, what are you spotting at the broader end of the spectrum?
Well, it's similar. I mean, it's flattish, but the breadth of the market is also very even keel. There's not much of a directional indication right now here. But a few stocks. Vodafone is doing well on the back of this big deal in the telecom space. But you've got the likes of Intellect Design, which is down 5%. Ramkrishna Forgings is down 5%. You've got Adani Power, Edelweiss again, which is lower. Oil India is down 4.5% on the back of the crude oil prices. Ujjivan Financial Services is down. PID Parry is down. Edelweiss is down 3.5%. Nalco is down about 3.5%. A lot of losers also this morning. Ashoka Buildcon, Godrej Properties, each of them losing about 3% apiece. On the upside, you've got Hathway Cable, which is up about 17%. Eros over the last few days has been doing well. So Eros today again is up about 10%. Then you've got the likes of Soba Developers, 5% higher. Future Retail, Future Consumer, Future Lifestyle, again upper circuit. So now they started the trend of upper circuit. Gayatri Project, then Networks, again Reliance Company, Reliance Group Company, they are up in the session. Network 18, 3.5% higher. Torrent Power, Shipping Corp, some of the other bigger names on the gaining side. 641 stocks decline, 530 stocks are advancing.
Quick opening thoughts before we get to Harsha Upadhyaya. Sorry, let me first finish with Abhimanyu. Abhimanyu, sorry, you were making that point. You spoke about two-wheelers. So what do you like in, you like two-wheelers more than four-wheelers, right?
Correct. So I think so from a way, how mobility might happen going forward and considering how the balance sheets are, I think so Bajaj Auto and especially Hero MotoCorp would be a preferred stock to look at because I think so the rebound there could be more sharper relative to the others. Considering that, people might consider looking the way they have issues in terms of, movement during lockdown, there could be a rebound in terms of demand for two-wheelers first. And their balance sheets are also relatively stronger. Maruti's balance sheet is also strong. In case of Eicher, I think since they also have a joint venture for the commercial vehicles, for that reason, there could be an impact there in terms of overall numbers. Otherwise, I think so two-wheeler could be something interesting to look at lower prices from the auto pack.
Okay. Thanks so much, Abhimanyu. Appreciate your time. Gaurav Bisa, quick opening thoughts and your top call for the day today.
As long as this is trading above levels of 8980, 9000 on the spot side, we can test levels of 9080. And 9000 has been a very strong magnet sort of. We are always pulling towards 9000, whether it's up or down. So as long as it's trading above that, we can play. We have a 30-40 point stop loss play with a target of 9100. As far as stock specific is concerned, I will go with TVS Motor, the kind of breakout it has seen. I think one can keep a stop loss of 300 and play for targets of 325.
All right. Thanks a lot for that, Gaurav Bisa. Appreciate your time. Harsha Upadhyaya Johnson right now needs no introduction, really. Kotak AMC, Head of Equities. Harsha, good having you. Thanks so much for taking the time out. What's your approach, Harsha, right now? We don't seem to be any close to a solution. A lockdown extension would mean an economic issue. We might see some stimulus from the government today. How do you approach this?
Good morning, Neeraj. Clearly, the situation still remains evolving by the day, and it's very, very fluid. It's very difficult to estimate the extent of lockdown or the economic impact of the lockdown at this point of time, as we really do not know whether there will be partial lifting of lockdown or there will be more relaxations that are coming over the next few weeks, etc. So the investment framework that we are using at our end in Kotak Mutual Fund is to look for businesses that have less leverage on the books, the businesses that have lower fixed cost structure. And also we are looking for the track record in terms of the management ability to withstand some of these external shocks, as we have seen in the past during the 2008 crisis or similar other crises. Although COVID crisis is unprecedented and it cannot be compared with any of the other crises that we have seen in the past, but at least looking at the track record, you can understand whether the management has the ability to come out, survive this COVID-related disruption and come out stronger. And if our valuations are supporting that, then those are the kind of businesses that we would look to add to.
Yeah, Harsha, good morning. Conversations with a lot of global investors are suggesting that even in the US and for that matter in some of the other emerging markets which have recovered and actually moved into bull market territory, the market may be running ahead of itself because the full-blown economic impact is yet to be felt. In light of that, do you feel that a slightly more conservative approach to investing is more prudent?
Yes, exactly. That is what we are following in the funds where we are getting consistent inflows even during this disruption. We have been gradually investing into some of the stocks where we like fundamentals and valuations. As you rightly pointed out, today markets seem to be estimating that second half is going to be the recovery phase, and that's based on the current assumption on lockdowns and the relaxations, etc. If there is any change in that kind of assumption from the market, then we could see further volatility in the market on the downside. And the longer it takes for resumption of normal activities, the impact is not going to be linear, it's going to be non-linear. There will be a lot of businesses which will face hurdles given that their balance sheets could be leveraged or the fixed cost structure could be very high. To manage some of these issues is easy for the first few weeks, but as it gets longer, there could be non-linear impact. That's where one has to be really careful in terms of taking investment bets.
Harsha, we were talking about the earlier on when the market started to move lower from levels of the record highs. The pace of the downfall was that much more sharper because the place where we started from a record high, and therefore the impact was a much sharper cut, a much swifter cut. But for the NBFC pocket, it is coming from a place of weakness. It had just started to mend itself post IL&FS, and now you have this other hit that it has to take on itself. So it's sort of a double whammy. Coming from a place of weakness, does the additional pain get justified right now?
We believe that it is going to face a lot of hurdles even going forward, because in a situation where the economy is slowing, obviously there is going to be pressure on the financial system and the credit costs would go up in that particular economy. And that's what we were seeing earlier. Along with that, the NBFC segment also had the issue of mismatch in asset liability mix. What we are seeing now is a complete stoppage of economic activities for 4 to 5 weeks, which means the ability of a lot of corporates, a lot of borrowers to really pay back is going to come under severe strain. In that scenario, some of the weaker NBFCs, which already had issues of the past cycle, are likely to witness even bigger issues at this point of time. And also, some of these issues can be resolved if they get further capital in terms of infusion. But given the current scenario, it is unlikely that all of the troubled NBFCs will be able to raise money at this point of time. Given these concerns, we continue to remain really circumspect about the NBFC segment. and we really do not have much position in the segment.
Harsha, is there merit in trying to have some bit of fresh, large investments into consumption? Because the valuations for the companies which will arguably do well, which have a larger share of the essentials in their portfolio, like Nestle, HUL, etc., seem to be so priced to perfection.
You're right, Neeraj. I think the market has already taken some of these businesses' valuation quite high, to a quite high level. But only thing is, I think relatively in terms of the growth, these businesses will be less affected. These are essentially businesses which do not have a large debt on the books. So to that extent, maybe over the next few quarters, given that the discretionary consumption is likely to be that much lower, you could continue to see investors favoring some of these essential foods or related categories. But even there, it's not that there is going to be a large growth coming by once the lockdown is lifted or during the lockdown period. It's essentially what it means is the relative impact in terms of the growth slowdown is going to be lower for this segment. And to that extent, even at expensive valuations, some of these stocks may find place in portfolios.
Harsha, what's the call on IT then? That's the other pocket wherein we've seen the three companies coming out thus far staying shy of any kind of guidance. And if the captains of the ship don't quite know where the ship is going, why should investors ply that ship unless the valuations are really attractive?
I would agree to your assessment somewhat, Neeraj. We also believe that while immediately we may not have seen any big changes in terms of the fundamentals for IT companies, but it is only natural that if some of the verticals where they are operating today, for example, BFSI, manufacturing, aviation, retail, etc., are seeing ill effects of the lockdown, then it's only natural that some of the IT spends will get postponed or delayed. Clearly, from our next few quarters perspective, we can expect that things are unlikely to be normal even for IT services. And as the companies have themselves suggested, the situation is fluid and hence it is difficult to give any kind of guidance in terms of the growth trajectory. We also believe that that's the case. And the only silver lining in this is it's not a very well-known sector at this point of time. And also, usually most IT companies have very lean balance sheets and do not have debt on the books, and they're all cash rich. So to that extent, it may remain a defensive play. But in case of a recovery, I would tend to think that maybe there are other pockets in the economy which will do much stronger than IT services to begin with. For IT services to do well, I think the global growth has to come back quite sharply, and Indian growth will have to lag that. But in current scenario, we believe that India is relatively better placed, and hence some of the domestic industries may do much better than industries which are linked with global growth.
Can't not talk about, Harsha, the final question on this conversation, can't not talk about the big deal that happened as well. And just wondering, what's your view on that? Not on a Reliance stock, but just your view on that.
Clearly, I think this is one of the landmark deals, especially coming in these challenging times. It just shows the potential of digital ecosystem in the country. It's one of the largest minority stakes that have been bought by a technology company anywhere in the world. It is also one of the largest FDI deals that have happened in the technology sector in India. So clearly, businessmen seem to be betting on the large potential of Indian digital ecosystem. Yes, there is a disruption today, but I think there are big plans that are there from these ventures. So it is exciting times for everything that is linked to the digital ecosystem, especially given that consumer preference for something on the digital platform is definitely going to increase post the lockdown, because we are all following social distancing, and that mindset will take us to move more towards digital platforms. So I think it's a landmark deal, and I would say that coming at a time where there are so many challenges across the globe, it assumes a lot of significance.
All right, Harsha, we leave it at that. Thank you very much for joining us. Appreciate you taking out the time and speaking with us.
Thank you so much. Thank you.
All right, and that's almost the end of the show this morning. But before that, as always, let's just quickly give you a coronavirus update as of 8 a.m. this morning. Total confirmed cases stand at about 19,984. So, most likely would have already breached the 20,000 marker. Active cases are at 15,474, with number of cured at 3,870. Deaths are about 640. So in the last 24 hours, the new cases have been about 1,383. Number of deaths have been 50, while recoveries have been about 618. Well, on that note, it's a goodbye from Neeraj and myself. Thank you so much for watching. Stay tuned to BloombergQuint.